Let's get a reaction to some YouTuber takes on the market right now. Of course, a Jim Cramer take as well. We're going to talk about Bitboy Supercycle that I heard someone tell me that he came up with, and of course, CryptoSavvy's 9K, and maybe Datadash as well. I think you know what I think about 9K. It's not happening. There's no signals that it's actually happening. The money is actually coming into crypto, not going out of crypto. If you look at the economic indicators in our macro economy, it's not that bad. Look at the holiday spending. It's less than last year, but it hasn't like fallen off a cliff. People still, by and large, have some money. Now, that obviously is different for each section of the income spectrum. People at the bottom may not have all that much money. But people in the middle and the top, they still have plenty of money. Holiday spending is not down, so we're not really crashing down to the bottom. Unbeknownst to a lot of you, a lot of tech jobs have like increased in salary massively in the last few years. Same thing with healthcare and a lot of other sectors. So while there are a lot of people with like very little money, there's still a lot of people with a lot of money out there. So you really needn't be worried about all this stuff. So that's that. About a CryptoSavvy's actual prediction about 9K, there needs to be a trigger to go below 9K. We had Terra Luna and then SBF stuff pulling us to about 15K. It needs to be something bigger than that. Binance's trial, I think, was the last hope of many people. The US is probably not going to go after Tether because Tether actually holds a lot of US treasuries in its reserve. And the US generally does not want to go after people that hold a lot of US treasuries because they don't want them to dump those treasuries, and the US basically have to pay back even more of its debt when that happens. That would be bad for the United States. So if you're an entity that owns a lot of US treasuries, the government's going to think twice about going after you. And plus, US treasuries are very, very good backing, so they're probably not going to go after you anyways. So the thing is, I think Binance was the last hope for a lot of those bears. They thought clamping down on CZ was going to send Bitcoin to like 10K. Yeah, that didn't happen. The trial ended. CZ pled guilty. Binance got fined $4.3 billion plus another $4 billion to the OSS and other agencies, and they're going along just fine. User deposits did not stop withdrawals, and it's cranking along just fine. It's eating the debts, or it's eating the penalties, and it hasn't ceased operation at all, which means they have the money and a lot more. See, people don't really understand Binance. They think Binance should be in the same financial dire straits as a lot of the other crypto exchanges. That's not true. Binance, since 2019, 2020, has not operated in the United States. That means they've been able to do leverage. They've been able to do margin. They've been able to do shorts, longs, everything. And they've made a boatload of money liquidating people and also just off those fees and services. So they have billions in the reserve. They might need to sell off a little bit of Bitcoin to pay off their debt, but it won't really be a lot. BNB has not crashed. They've exited the United States, but Binance.us will continue to operate in the United States because they're not affiliated with Binance anymore. So Binance.com has left the United States for good. But the thing is, they were hardly operating in the US at all since like 2020. So that really doesn't affect their business all that much. CZ getting fined $50 million just to slap on the wrist, basically. Even if he goes to prison, remember his wife's the co-founder, so she'll probably still run Binance behind the scenes, even though they got a CEO. So nothing really that much has changed. The DOJ's gotten its big payoff. Binance exited the US. They've cleared the way for BlackRock and ETFs. And unfortunately for the bears, it did not dump the market a lot. So, everything's gone now. The slate is clean, and there's nothing really to pull us down that much. So I don't really see how CryptoSavvy's like 9K or Datadash's 9K prediction is actually going to work. It just doesn't make any sense right now because the economy doesn't look like it's falling apart. It's actually doing okay. All the bearish stuff is basically like gone over, and we only have the bullish news left. So we're much more likely to go 50 and 100K than we are going down to 9K. Now let's talk about Bitboy Supercycle. I'm not exactly sure why there'd be a supercycle. I think Ben Cowan talked about this last time in the last cycle. I don't think he thinks this anymore. But yes, there's the halving, there's the ETFs, but they all come at the same time. And I don't really see any reason for a supercycle. The only way you get a supercycle is if you actually detach from the 4-year cycle. But the thing is, I don't see us detaching from the 4-year cycle. It's not like Bitcoin's halving just all of a sudden became 8 years. It's still 4 years, mind you. And I just don't really see how the logic works there. Yes, there's going to be like a flux of money from the ETF stuff, and that might make the bull run a little bit longer, but it's not going to stretch it out 4 more years. That also might make the bear market a little less, bad. Basically, it might make the bear market like a lot more moderate than this one, but it won't negate the bear cycle. Like once Bitcoin pumps way up, it's going to come down. Like most likely it's going to hit its head in maybe like late 2024, early 2025, and then it's going to come down in 2025 and 2026. There aren't really events that would actually result in another like bull market at that point. When the first couple of ETFs get approved, it's going to push the market up, but all the ETFs afterwards, like, the first batch is going to get approved like early next year. All the ones afterwards really aren't going to matter all that much. And the separate ETFs for the smaller coins, they're really just only going to affect the smaller coins. They're not really going to affect Bitcoin in the entire market. The Ethereum ones are going to affect Ethereum and maybe ERC20, but those will come in late 2024, early 2025 as well. So after that craze and euphoria is over, things are going to start dumping. BlackRock and Fidelity's buys to support their ETF are going to keep it uplifted above a certain minimum. But let's not forget, you can also short the crap out of ETFs. So there's going to be that factor as well. Yeah, there's going to be more manipulation by like BlackRock and Fidelity instead of like Binance and Coinbase. But that doesn't necessarily mean we're going for a super cycle. A super cycle means you have to change the fundamental market. And even with the ETFs coming in, you're still not halting the 4-year cycle. And people were still going to sell off on that euphoria. I just believe the bottom level is going to be a lot bigger. And will there be scams like FTX next time? I'm almost sure there will be. Maybe not quite as big as FTX, but enough to make it go down during a bearish market. You're saying like, oh, but next time we won't have this inflation stuff. But that really doesn't matter because last time we didn't have the inflation stuff and it still went down. It even went down worse than this time. And, it's just been a really long bear cycle. And I do believe it's going to play out again in 4 more years. It makes no sense, honestly, that it doesn't play out the exact same way in 4 more years. Unless you get the Bitcoin engineers somehow to change the halving to like every 8 years, which would be very, very interesting because that would kind of like screw up the mining thing because it would make the last Bitcoin mined much, much earlier than previously thought. You're not really going to get like an 8-year cycle unless you change that basic Bitcoin halving because that's what everyone is kind of like centered around. And that's generally like what the psyche's around too, like that 4-year cycle. People kind of expect it, so they act in a way that makes it come true. It's more of a self-fulfilling prophecy than anything else right now. I mean, if you really think about it, the supply of Bitcoin doesn't actually just halve every 4 years. It's just the incoming supply halves every 4 years. And it shouldn't matter all that much because around 85-90% of this Bitcoin's already been mined. So only about 10%'s left to mine. So it really shouldn't influence it that much. But the psychological factor is so strong that I still think it'll actually continue. And like I said, I think the ETFs will just raise the low bar, but it's not going to prevent us from coming back or coming down from the high bar at any point. So for me, I don't really see the point of Bitboy's like super cycle. It's a nice theory, just like Ben Cowan's super cycle theory last time. I really want it to be true, but I can't really see it being true. And of course, we have to talk about Jim Cramer. Well, Jim Cramer, even though he's hated Bitcoin, he's finally admitted he's been making a lot of money on Bitcoin. He's switched between bear and bullish, and generally, like if you do the exact opposite of what Cramer says, you generally make money. But his hate on Bitcoin has been FUD because he's actually been actively investing in the market, as he has admitted, and he's done very, very well actively investing in the market. He's made probably millions of dollars while FUDing Bitcoin to his audience. He finally has admitted his mistake and said, yeah, maybe I spoke too soon. But that probably cost people a lot of money to actually stay out of Bitcoin. He's finally saying, if you like Bitcoin, you should buy Bitcoin. So Jim Cramer, man, reverse Cramer effect. He doesn't always stick to his guns. And a lot of times it looks like he does the opposite of what he says. Because obviously if he had been avoiding Bitcoin, he wouldn't have made a lot of money buying Bitcoin. So obviously, his show is mostly for drama. Don't actually pay attention to his stock calls. They're really, really bad. Like they're just as bad, if not worse, than like our crypto predictions. Probably even worse. because he seems to get everything like the exact opposite, which I don't really know how he manages to pull off. So yeah, no to 9K, no to Supercycle, and no to Jim Cramer. That's my review and reaction to all these YouTuber predictions and what Cramer does. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.